Alibaba just reported pretty hot results in light of the current economic environment in China. And despite that, investors have largely sort of ignored this, and the stock is only up marginally in midday trading. So the question is, what exactly is going on here? What are investors seeing? And is all of the risk priced in? That's what we're going to dive into in this video. So guys, smash that like button, subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel. And I was really looking forward to the Alibaba results. This quarter was the first quarter that I didn't do an Alibaba preview. And the reason why I didn't do a preview is I had no idea what the results were going to look like. I really thought it was going to be a bloodbath because there were so many lockdowns in May and April. And so I really thought that their financial statements could be further strained than they actually ended up coming out to be. And so let's dive into this one. So you can see overall that the stock did open higher, in fact, much higher. It was above that $100 per share mark. But I think the investors have been digesting the read-throughs, especially for Alibaba Cloud, and they realize that this might not necessarily be as positive as they think. But in my opinion, and you guys know that I'm super biased, I'm obviously seeing more upside here than what the average investor, I believe, is seeing, because of course I'm more of a bull on this name than the market. So effectively I'm just calling out my own bias here, but I think it's very important to do that, especially with securities, just to sort of keep yourself in check. And this is what I think is happening. So you can see here that this Bloomberg article does state that Alibaba's sales were better than feared despite the economic turmoil. And so the story is largely that it's up only slightly because the results were just less bad than what the market expected in a quarter full of lockdowns. But what the market didn't get was exceptional results. And that's what it's going to take, I believe, to take this share price much higher than where it's currently trading at. Now, diving into the results a little bit. Now, this is just a first look. I will deep dive into all these segments like you like for me to do every quarter, and so I absolutely will do that. But the two areas that I want to point out to you guys is that, one, for total China commerce, I actually expected a much higher decline in the double digits or so. So this is very good news that the quarter over quarter sales decline is not really that high. And so that's really good. But the bad news is I think the cloud growth is slowing as more consumers go to more government-backed enterprises. I don't buy Alibaba's explanation that just cloud as a whole is just slowing down. I don't think cloud is slowing down. I think they're losing consumers to government-backed enterprises. Now, I don't really know what the details are, but that's largely what I've been seeing in media reports. And so we'll see how this plays out. But the question is, should we now start tapering down our expectations for cloud growing out into the future? And what does that mean for our valuation? Well, cloud wasn't a big part of my thesis. It's grocery. I look at this business as a future-focused grocery business, which is why I'm such a bull on the name. These low-margin, technology-first types of businesses is what I think the CCP is very friendly towards. And that's where Alibaba stands apart from these other juggernauts in the Chinese securities market. Now, moving into the China commerce retail revenue, I think what you're seeing here is that their revenue actually declined due to increased order cancellation, which was due to the impacts from the COVID-19 resurgence. So their commitment to their zero COVID policies in China, which I've been ranting about over and over again all throughout the quarter. And so they did have disruptions in April and most of May, which slaughtered the quarter. But the read-through, I think, is that you could have a surge in Q3 as a catch-up for unfilled demand. So pay attention to that. The other thing is, notice their direct sales, which includes their grocery business, was up 8% in spite of lockdowns. And so I still might be the only one who talks about this, but grocery remains my thesis behind Alibaba, not cloud, and they are firing on all cylinders in the grocery space. And remember, guys, in their Investor Day presentation, they did say that this is a primary focus. They're going to take on Pinduoduo. They've been doing a very good job, and it looks like even in a quarter that should have been hit hard, especially on this space, they did well. So the read-through is you could actually get exceptional results in Q3, even in the grocery space. Now, diving a little bit deeper into cloud, notice that Alibaba said that they have softening demands from other customers in China's internet industry. Now, that might be a realistic and reasonable explanation, but what I think is really happening is that they could be losing market share to government-sponsored entities. So maybe we have to revisit Alibaba's cloud business growth expectations. I was forecasting out around 20 to 25% a year. Do I have to change that to around 10 to 15% a year? Ultimately, I don't think that it's going to change my valuation considerably, considering that cloud is such a small part of Alibaba as a whole. Now, just moving into their free cash flow, notice that it's still generating a huge amount of free cash flow. So I call it a cash flow generating juggernaut. They generated $3.3 billion in the past quarter, but the one thing that I do want you guys to note, and this is why I always believe that it's important to look into the details, is that they have generated $3.3 billion despite the fact that they stepped up their reinvestment into the business. They reinvested 11 billion won in the quarter, which is 1.6 billion won more than the last quarter of last year. But I want to demonstrate this using last year's information. So you can see here that recall in fiscal year 2022, they invested 42 billion won, which reflects an average quarterly amount of 10.5 billion won. So the 11.1 billion invested in Q1 of their fiscal year 2023 is a step up in spite of the economic challenges impacting the country, which goes to show you how strongly they believe in the resurgence of their business, and they're not stopping their capital allocation policies. And that's different than what you're seeing in North America. A lot of people are pulling back. There's hiring freezes. Of course, there's capital expenditure slowdowns. You're not seeing that with Alibaba just yet. So you could potentially see a slowdown in CapEx, but sort of like a straight line for revenues, which of course would push up the free cash flow. So there's a potential additional benefit or upside to the free cash flow for the year that we're expecting for Alibaba. So this is just something to just keep in mind in this environment. And the excess capital remains very strong. They have 67.7 billion US dollars in cash equivalents, which reflects 26% of their $261 billion market cap. And they have $34.1 billion of equity securities, which reflects 13% of their market cap. In other words, 40% of the market cap is excess capital. Now, someone could look at this balance sheet and argue that their investment in equity method investees is also excess capital. So throw another 12% on there. So more than half of their market cap could be argued that is excess capital. And so what does that mean? That means that the business is trading at an absolutely huge discount to their intrinsic value, and I'll show you the valuation afterwards. And what are they doing with that excess cash? Well, notice that in the quarter, they purchased approximately 38.6 million ADSs, which is the equivalent of 308.7 million of their shares that trade on the Hong Kong exchange. And that was the equivalent of $3.5 billion under their share repurchase program. So effectively, they paid out all of the free cash flow that they generated in the quarter. Now, they have an unutilized amount of approximately $12 billion under this program. They are absolutely using it all to purchase shares. They're going to run out of authorization room by the end of the year or by the end of first quarter next year, I believe. And so they're going to continue to up that share repurchase authorization. That's what I do believe. Now, the one interesting point that I do want to bring up is that because they don't have a lot of debt on their balance sheet and the share price is so depressed, this could be an opportunity where they might want to consider issuing large amounts of long-term debt that's really termed out and repurchase shares with it. Now, that adds a little bit excess risk to your balance sheet, but it could be very accretive to repurchase shares at the current share price and really support the current shareholders. And so something to consider. It has been rumored that that's what Facebook is considering to do. So it might be interesting if Alibaba goes down that road as well. Now, when it comes to the valuation, I still believe that this company is incredibly undervalued. And once again, this is not investment advice. Do your own research. But if it continues to decline back into the $80 per share area, I'm going to very seriously consider tripling down on Alibaba. That's how much I believe in this name, especially from the perspective that of the current amount being reflected in the market cap, a significant amount of that is excess capital. So that provides to me a lot of safety when I start doubling or tripling down on this security. Now, the one thing that I am going to be doing now, and I promised actually last quarter that I was going to do this, is I'm actually rebuilding that Alibaba model. I'm going to build it out in a much more granular method. And so that model will be released for free to the Patreons at that lower level for the Patreon subscription. And so if you want to get access to that, join us at that lower level of the Patreon. Now, the other thing that I do want to point out to you guys is that if you missed the Alibaba series for their investor day, now's the time to review that series. Even if you watched it when it came out back in December, now's the time to review it to get up to speed about what their strategy is. I really do believe that things could potentially pick up at this point. Now, we could run into other issues. The CCP is very unpredictable. There could be other things that happen. The global economic slowdown could impact China, but the way that we've seen Alibaba navigate the first quarter, which should have been a tough quarter, shows how strong management is here. So, in order to get access to that Alibaba Investor Day series, click right here.